Hey, thanks for tuning in. In this video, we're doing a weekend review for the week ending October 15th, 2021. You're looking at a chart of the S&P 500, the weekly chart. Guess what? Back above all the moving averages. Close at high on week. You gotta love how almost with certainty the break of the histogram PPO low here is what pretty much marked the bottom. Yeah, so any acceleration to the downside was enough for sentiment to just be completely one-sided. I mean, I remember 2 weeks ago, end of October, no one wanted to buy anything. What's very interesting too is this channel. It's just always in play. I don't know what else to say. And in terms of symmetry, which I always look for in charts, that looks pretty freaking good to me. So if this is your A, this is your B, and this is your C, again, some running flat seems to work. I know other people have different counts. It's hard for me to try to focus on which count really matters. I don't think Elliott wave is as important as most people think. It is very important at certain times. That being said, where we are in this chart, it's quite obvious there's really only one thing to do, and that's buy the dip, right? Why is that obvious? Well, we were in a sell the rally channel. We're now out of that channel. So how can we pretend that sell the rally is the right play again? We also have an inverse head and shoulder here that broke out of the neckline. Breaking above this neckline, finding acceptance above this neckline will bring in a target of something like, and this is just, something like this, right up to all-time highs, 456. So that's really where we're looking. And in terms of trying to recognize whether or not this correction is over, I think the only thing you can do is look at the moving averages. More specifically, simple moving average 10, EMA 5, EMA 8, something in that range. And if price starts to get below that, well, then you have a big problem. The buy the dip crowd is not here. They're not defending those moving averages. When the corrections end and the market gets back to resuming its longer term uptrend, because don't be confused, SPY is an uptrend on essentially every single time frame that you look at, except the daily, which again changed this past week. So it's just resuming its larger time frame trend, which is up. So you're going to find a series of higher lows and higher highs. The Elliott wave, people are going to try to call this a 1-2-1-2, some extended one count, because they're so confused as to how price is back above the moving averages. It doesn't really matter, right? The way that I play the market is real simple. I was interested in buying stocks here. Why was I interested in buying stocks there? Real simple. I had an invalidation point right there. Okay? So when the market bottomed here, it meant we could then be buy the dip here. There was 5 sessions where buying the dip against the 428.86 low provided you insane risk reward. Even if you were only measuring your risk reward as a function of distance to the top of the channel. So if you come back here and say, all right, on October 1st, from that point to the top of the channel is about 2%, 2.5%. From that point to invalidation was about less than 0.1%. So as a function of risk versus reward, you're somewhere in the 10 to 1, 100 to 1. Insanely good risk to reward. And by that same token, acceptance below this meant that this was unfolding. All those longs, all the people that just bought this dip that were buying down here, if in fact the supply-demand imbalance was favoring the sellers during this 5-period session where I was buying, then price would have simply just done this, be inverted. The symmetry of this pattern here, inverted down, which would have put price down at the 200, would have been a buy. The reality is there wasn't enough selling pressure to push price lower. And these longs were rewarded. So if you got long here, if you got long here, we are now breaking out. Why would you be selling? You're not. You're enjoying the ride. You bought the dip. So just looking at SPY, this channel is what I'm looking at. Obviously, we remain in this channel. Very, very bullish. Nothing to talk about. Looking at the Qs, a very similar setup. Right, we were active participants in individual tech names instead of the ETFs this whole 4-day period, just like we were on SPY. Very similar inverse head and shoulders pattern, breakout above the neckline, breakout above the downtrend, trying to capture the 40, back above the 20. The 10 is sloping up. The 5 just crossed above the 10. These are all buy signals. PPO, which is using the 12 and 26 cross. Histogram, back above all of here. In terms of divergences, held this low here. So we at least have a positive bullish divergence. So yeah, I mean, this to me looks like buy the dip back in play. We were in sell the rally the entire time we were in this downtrend. And as of the 14th, they broke out, and the 15th, they continued higher. That's exactly the bullish outcome a buy the dipper would have, buying back here, buying right here would have been looking for. And just to give you some levels now to look at, you can use your fib extension tool and connect the low here to the high here, and then pivot that off the low here. And it gives you some levels up here. And what I will talk about, and this is of contention within the community, I personally, if this is going to be a 1, 2, 3, 4, 5, some impulsive move higher, you would expect this wave 3 to end around 1618 to 2618, somewhere up here. And she would continue to hit another all-time high in this count. If this is not impulsive, you're going to get something like that, where the C wave is a 5-wave move up. But really what you would be getting within the context of the time frame higher than the daily would be a 335 flat when you zoomed into the daily. And this would be an ABC flat, something like, just to get rid of all this to make it easier for you, the flat retrace is about 90%. So you're going to come back up here, fill this gap, and then come right back down, break this low at 350, come down, close below the 200, convince everyone the bear market is over, fill this gap down here, come down in, possibly even to this longer term trend line back here. But again, this would be the weekly flat scenario. And as you can see, the PPO here is suggesting that. There's just no other way to look at it. We do still have, though, which is beautiful. Something like this is possible. No reason that's not possible. And if you look at the 20, if you look at the dominant trend, right, since the 20 was captured, it's been tested 1, 2, 3, 4, 5, 6, 7 times now. This is the trend line that if price finds acceptance below, you will certainly see a change in character in all of the big tech, QQQ in particular. But that's not what we have here. We do have this rising wedge. It did appear to be looking like a breakdown, and boom, doji reversal. And if you look at the volume, all the sellers here, sellers here, sellers here, it's all declining red as PPO is resetting to the zero line, and the low here is 311 and the low here is 295. So we did print a new low in momentum, even though it was a higher low in price. That's a hidden bearish or hidden negative divergence. And the goal is to track these type of divergences. When momentum and price differ, you tend to find reversals. And what you want to see, if you're bullish, is every time you go higher, you would in fact be setting a higher high. So if I were to look at this, big 1, big 2, big 3, big 4, little running flat, and then this is your ending diagonal 5. And when this breaks down, tech will certainly come back down to here. Invalidation level being the high of the pre-COVID dump. That's your invalidation. So the further from that we get, the further we are from risk, 35%. And if you look at this chart, hey, the brown line, the 200, really is the long-term trend. Now, I'm not recommending we're going to the 200. We're still above the 20. There's nothing telling us that we're going lower. I'm pointing out that at some point, this longer-term chart will revert to mean. Like, price doesn't go straight up in a line. It goes up in a channel. And it oscillates around mean within that channel. And the best way we can track that is usually standard deviation moves away from mean. Bollinger Bands do a really good job of doing that for traders. But in this particular instance, and in the default settings of the Bollinger Bands, the middle band, which is mean, is SMA 20. I use SMA 20, it's my green line. So when we see reversion to mean, or when I say the green line or SMA 20 has been tagged 27 times now, or whatever it's been since the 2020 lows, what we're really talking about is price has reverted back to its mean 7 times since August 2020. And each time what you found is mean was higher than before. And by very definition, that is what makes an uptrend. So, enough theory talk. SMH. Quite obvious here. Doji at the 40. Demand again at the 40. Close above last week's high. Right at EMA 5. Right at SMA 20. PPO and histogram are showing me that it's possible we're going to see some reversal. But again, same problem with the Qs. The high was here. So they're resetting back kinda to the zero line. But they're not there yet. And what this tells me really simply is we're going to wait for PPO to give us the bullish cross, which failed right here. Or we're going to wait for PPO to get to the zero line. And one of the two is going to trigger our buy. Again, I I don't see relative strength here. I see this as further from risk, especially if I look at this tool here, which is your VWAP. You can see actually now, if you go back to the COVID, like 250 is actually a really good price for this. So that's why I think you found buyers. But if you go back to the 2018, the start of the run, you can see all of the shares are really at 108, right? And they're just trying to build another shelf up here so that they can launch higher. And you know, if the bull market remains, it's likely that will hold. If this is your 1, this is your 2, this is your 3, this is your ascending triangle 4, maybe one more up for a 5. But there's a lot of run from the 2020 low to the 2021 high, and there was no base. No base, right? Like here's a base. We back test the base, we launch away. Trying to build a base, but the low of this base is 216, right? Unless they start to take this and turn this into some type of channel here, you know, which is also a possibility. But right now I see this just rising wedge breakdown type of thing. So we'll see how it plays out. It's not awful. Again, I see a potential head and shoulders here. I do see some gaps up here that can be filled. Test of the 200 for the first time in a while. That's very good. PPO cross, good. No problems there. Did hold a positive bullish divergence, which is nice. But again, you know, this one has been relatively strong. Will it remain relatively strong? How much longer? I don't know. This is not the PPO bullish posture you want for an uptrend, right? This is the posture you want. So if we get across and we start to see acceleration away from the blue and red lines like we did back here, then I'll be very aggressive in adding to SMH. In this posture here, there's no reason to be aggressive adding to SMH. Let's move to IWM. Similar story here with IWM. I'm not aggressively adding to IWM either. However, you can see the histogram has bottomed out for a long time now. But again, we're still range bound. Weekly close above all moving average. That's one for the bulls. One thing I will point out again, and I will say this a lot, is, you know, when range bound, you need to focus on the oscillators. When trending, you need to focus on the moving averages. And right now, it's very obvious. This is in a range. It's a big old rectangle. What do we have? We have a series of higher lows and lower highs. And this has been going on now at minimum since August 19th, at minimum since July 19th, right? But what I will say is that this low was put in, this high was put in, then this low was put in. So to me, this is the most obvious pattern we have. Right? Very obvious ABC. The question is, does this have to also be a big contracting triangle, right? Where ABC up is your D. This is your D. And then is your E. Okay? That I would see as very, very plausible. Very, very possible count. Very possible. I don't see why that can't happen. What I will also say is I don't see why, you know, you can't have something, you know, ABC up. Yeah, I don't know. It's tough to count. It gets very hectic, so let's avoid the counts. Let's keep it simple. If in fact we're going to start trending higher. And this oscillator, as I've told you, these are the clues. Just like we had back here, an ABC up that matched the price pattern, you'll have that pattern in the oscillator as well. If this is simply an A, B, C, the high from here, 227.68, 228.41, right? So this pattern technically completed on Friday, and that's when the sellers returned. Then what you will have is also an ABC up here, which we do. And what we would then be looking for is something like this. Again, right? But from here. Something like this. For the symmetrical move to complete. And that would align with this 5-wave move lower or something like that. Impulsive move down on the Russell Daily. And what this would certainly do is allow the weekly to break below the blue line, which is weekly 40, would allow it to come all the way down to 208, possibly even SMA 80 or something like that. So, it's a real tough one to count. What I would highly recommend is just use the oscillators, use the moving averages, look at the weekly chart. She doesn't get below the blue line. All right. I don't know how everyone can be calling for lower prices if she's had 1, 2, 3, 4, 5, 6, 7 attempts to go lower. She's failed every time. That's not bearish. And if you zoom into the daily, we do have a break of this higher low and higher high pattern that we've been tracking for some time now. Now let's clear all this out of the way. All right, this higher low, higher lower high, higher low, lower high, higher low, higher high. Okay, so I got one that's gonna really mess with your head. How much of this, October 15th, was simply monthly OPEX? And you just won't know. There is no answer to that question. Everyone's going to look at this candle and say, well, this is a bearish reversal candle. It is. But guess what? Look at the momentum. The bullish momentum, the momentum to the upside, increased day over day. Wow, she's above all the moving averages. That's not bearish. The 5 just crossed above all the moving averages. That's not bearish. The 10 just crossed above the 20. The 12 just crossed above the 26. That's the PPO look. That's not that's all bullish. The indicators, which have been tightening since the July 19th, right? Because this was just a lower high. We've been tightening since July 19th in a low, high, higher low, higher high, low, high, higher low, higher high pattern. And if this trend is to continue, she will have to hold this low of negative 0.14 and break this high of 0.77. And if that is to happen, we'll likely see by Tuesday of this week a break of the gap up here at 229. If you turn after hours off, you'll see this and see a bearish candle as well. But everything else is exactly the same. And this gap up here likely gets filled at 229. But if they don't fill the gap at 229, then the 234 gap, 229 gaps remain unfilled. And this gap down here got filled. So the only gap left would be the 222.56 gap. So if price were to come back down, and this is the market symmetry that's just awesome, right? If price were to just do what it did again on the 15th, come all the way down here, you'd fill this gap. There'd be no gaps left. There's no gaps down here. This entire range, and I do find that very, very interesting, is that they would leave these gaps and come back to visit them, almost as if they were the destination the whole time, right? Like this gap here. Okay, they came right back down to visit, to visit the gap. Like this gap up here, right? This was the target on the upside, this gap. It's like they knew that that was the supply, or the computers knew that was the supply that they were going after. Same thing down here. They fill the gap, boom. Guess what? Coming to the upside to fill this gap now. Fill this gap, boom. What are we doing? We're going back down to fill this gap now. Right? Boom. We fill this gap down here. What are we doing? We're coming up here to fill this gap. Come up here, fill this gap, boom. What are we doing? Coming down to fill this gap. And that to me seems like the dance. So to have price come back into 222 this coming week would make perfect sense. Again, I feel like I've spent a lot of time on IWM, but I do want to point out it's very different than the other indexes. SMH, QQQ, and SPY all look very, very similar. And what I do find very, very interesting is there has not been an all-time high in this index since March. And if you look at the oscillators for when price really peaked, it certainly peaked basically December 1st and has been setting lower highs in momentum ever since. This one really being the peak in volume, this February to March, right? I think that was the peak volume right here. So that was your wave 3, this being your wave 5. This has all been corrective ever since March. So if that's going to change, it's going to change very, very soon. It will happen in Q4. And it will give us clues. And if it doesn't, then, this is going to remain range bound until Q1 2022. Yeah. That pretty much sums up this. I'm gonna now go into gold. I'm gonna go into a few other things, right? This is definitely in a downtrend. There's no other way to describe this, okay? So if price is going higher in a downtrend, it's a corrective move. That's all we're looking for, like here. Something like that, whatever, however we want to label this, right? That's all we're looking for. We're not looking to escape this channel. We're looking for slightly higher prices. TLT, similar scenario. Downtrend, looking for slightly higher prices. Octa, okay. Trend is non-existent. So use the oscillators, look at the corrected pattern, an obvious triangle in my opinion. This to me looks like the start of an impulsive move that will complete up here at the gap. It then sets up something like this and like that, right? And I do think all-time highs by December is certainly in the cards. Buy the dip on Octa. That's a weekly reversal candle back above all the moving averages. This is a stock to play. Shopify as well. Not as bullish, all right, but certainly we found a low at the 40. We're moving higher. I love the look on the daily here, right? The breakout of this descending bearish momentum, breakout of the descending trend line in price goes higher, you get above 1453, get above 1500, she's going to all-time highs. So certainly one to keep an eye on. Airbnb has just been an absolute killer, and if I really want to take everything away, the most obvious pattern I start to see is our cup, our handle, which is an ABC, right? It was also beautifully precise in terms of fibs, 1.0, right? Wave C is equal to 1.0 of wave B, AB. If this is what plays out, you're going to have an all-time high in Airbnb by the end of the year. So we'll see. I'm not predicting that. Pointing out that there's still a gap up here that they have not filled. And this is a potential cup and handle pattern, but really more than anything else, this is a base. Okay? And this is a base that's really gone back like this long. And every time we get above it, price just reverts back to it. Then they started accumulating. We're back to where we were to start, basically the year. No change on the year, all accumulation. To me, this is a big base. So keep an eye on it. And this PPO is awesome. Like, look at this acceleration to the upside. Whether this is something like here, right? If she does print another high, comes up here, tags this line, something like that, you could certainly see this play out. But, over time, ultimately a new all-time high. If in fact it's something more like this, and this was all corrective, these are overlapping. So if it was something more impulsive down, 1, 2, 3, 4, and then a fifth wave move lower, something like this, then they would have had to stay below this pivot. That's why this week, when they printed above, it was such a bullish sign. Even though people would look at this and say, wait a minute, what about that big upper wick or the shadow? Doesn't that indicate sellers? And it does. I mean, wicks on the weekly time frame are very important. But in this particular instance, what it also verified was that this down move is in fact corrective in nature, and that this up move was impulsive. And this could very well be a massive wave 3 in the making. Keep an eye on Airbnb. And I will end with ENPH. Just an absolute monster going back to the start of this bull run, 2017. If you look at SPY 2017, right here, right? So this was a part of this peak. So every correction since with SPY, ENPH has corrected, but set higher highs, just like SPY. So this is like one of the best outperformers that's correlated with SPY, in my opinion. If you want to, just buy and hold SPY, you can buy and hold ENPH as well. ENPH is in SPY. You could also build a trading system that allows you to buy and sell ENPH to try to create more alpha over the buy and hold strategy. It's all whatever you want. I will say this, capturing the weekly moving averages after the previous week's bullish reversal candle means that the next 2 to 4 weeks imply sideways to up as the high probability bet. Buy the dip back in play. The structure of here is very clearly a 5-wave move higher, very clearly a zigzag lower. I mean, this is just textbook Elliott wave. Like I said, there's certain parts where Elliott wave makes a lot of sense. There's other places where it doesn't make any sense at all. Here in ENPH, I think this is perfect sense. This is right out of the textbook. I mean, I can't tell you how many times this pattern is in the wild, right? What you don't see 1,000 times is 1, 2, 1, 2, 3, 4, 3, 4, 5. And then the next wave is also an extended wave. And then the wave after that is also an extended wave, right? You can have one extended wave. That's it. And generally speaking, this is the pattern that you see. 1, 2, 3, 4, 5 up, A, B, C down. And then guess what's coming again? You got it. Another 5-wave move up. This will print a new all-time high. This did maintain the PPO divergence, positive divergence, right? So as she set a new low in price, she maintained the higher low in momentum. all of that stuff. This is also overlapping, right? This here overlaps with the one, so you know that this has to be correcting this entire move. And that's why you look at the fibs the way that we did. But that's enough of Elliott. EMPH, awesome stock to look at. The PPO bearish divergence was broken. That was your clue. We had the aggressive add these 3 days at the fib. We had the conservative buy signal this day on the 8th. Market buy the 7th. They both would have been acceptable. And now price is up another 13% from then. So if we were to look at this on the daily, we're looking for another high. If you were to look at this from a pattern standpoint, when you break out of this falling wedge, the profit targets are the touches of the trend line before. So this is where all the sellers are. And I mean, you can see it. They're all trapped right here. Look at all these sellers. Buyers, sellers, it doesn't matter, right? Market participants that are trapped here. And when price gets back to that level, they generally want to end the pain and sell. That's what's going to create the wave 4 low, another wave up. It will then retrace this wave, and that will then give us some targets for where to go from here. Let's say wave 1's like that, wave 2's like that. We now have our extensions for wave 3 of wave 3. So it's hard for me to be bearish on SPY when one of its leading components is showing me the pattern that I see on all time frames everywhere. And it's the bullish one, not the bearish one. So that being said, that concludes the video. I know this is a long one, almost 37 minutes. If you like the content, hit the like button, subscribe to the channel, check us out on Twitter, DM me, comment. If you have any questions, I'm happy to help. And we'll see you in the next video.